All right. I think we're getting people in.
Yeah, I think we're looking good. Hi Joy, hi Kimmy, hi Mary, hi Megan. Good to see everybody in here. Appreciate you coming by.
Oh yeah, looks like we're getting everybody. Hi. Awesome. Thank you. I appreciate it. Yeah. All right. Now that you guys are all in, let us know if you can see everything, you can hear us all right. Make sure everything's working that way before we get going. Here I'm going to put this in here for everybody. All right. Okay, we're gonna have a few more people still coming in here, but for everybody that's in here, just so you guys are aware, just for little housekeeping things while we're getting rolling here, this is going to be recorded for everybody. So if you guys have to jump out, you miss something, or you want to recap something, this is recorded. You guys will be getting a copy of this recording by tomorrow. That way you guys can recap everything. And the main thing to do is please utilize the chat as much as you can. You guys won't be able to physically talk with us on here, but if you use the chat, either myself or Ryan is going to be watching every minute of it to make sure we can answer questions as we go along. If your questions are kind of more specific to you, we do ask that you book a one-on-one call with us. That's at the link here I just put in the chat. So you book a call with us, and then we can have a one-on-one chat about your specific. But if this is what it kind of looks like. Um, so yeah, a one-on-one chat with everybody. But if you just want to keep putting the questions in there, we'll have a chance to answer them either as we're going, or we're going to stick around to the end of this and we'll have a Q&A session and answer anything that we missed there. So again, for people that are just joining now, we're just going over some things. Utilize the chat as much as you can. There's Ryan and myself are on here to answer everything we need. And yeah, we're looking forward to this. I guess the biggest thing is there's a lot to cover in all of this. We are going to be looking to get through this by about 8 o'clock for the majority of it all. And then we'll stick around to answer any questions you guys have. But again, welcome to everybody that showed up today. I put in a link in the chat, and I'll do it for the people that have just showed up as well. This is a booking link. So if you want to talk to us one-on-one, just click that link. We'll be putting that in through as we go. So awesome. We got a good group already. We got about over 20 of us in here so far and more coming in. But again, welcome everybody. Welcome to this first time home buyers webinar. So we're going to put on a pretty informative webinar for you guys about just the start to buying your first home. Okay, we do not have enough time to go over every detail and aspect of buying your first home. This is just the initial start, what you need to get started, and some ways to save you money and to avoid some mistakes along the way. And then we can kind of take it from there after. So again, I want to thank everybody for showing up on this nice cold evening here. And as you guys noticed, when you signed up, you did get a message saying you are going to get a free complete guide to buying a home book. That is this book right here that I have developed. This plus a buyer's guide will be coming to you guys in an e-version to your emails by tomorrow, as well as the recording of this. All right. So tomorrow, check your inboxes, check your spam folders, that kind of stuff for tomorrow. If you guys don't see it tomorrow for whatever reason, reach out to me and I'll make sure to get it to you directly. But this should be in your inboxes tomorrow, plus the recording. So again, that's just a thanks for being here with us. I appreciate everything. Then we're going to get rolling here, so we kind of keep a good pace. And so, as I mentioned, this is just to getting started on buying your first home. So I am going to cover in the majority of this 6 common mistakes that lots of first-time buyers make when buying your first home, and then we can kind of discuss how this is going to help you and save you money. So the main thing when I tell everybody about buying your first home is financing is going to be the big and most important step, getting a pre-approval. So that's why that is number one for the common mistakes, is not getting a pre-approval. The other ones we're going over is not knowing about the New to Canada program for anybody new to Canada, using your bank is a common mistake, buying directly from a builder, skipping a home inspection, and skipping a condo document review. These are the 6 common mistakes we have. These are the 6 ways that are going to save you money and save you headaches when buying your first home. Okay, so that's kind of what we're going to be going through for this whole time here. A lot of it is focused on financing because that is the biggest step, and then a little bit left of the real estate side of things. But you'll see as we go here. So again, like Ryan mentioned, thanks for everybody. Welcome everybody. Use the chat as much as you can, and we're going to kind of utilize it here right away. So I want to hear from the chat instead of me just rambling on for now before we get going. I know there's a lot of stuff going around. I know in the media, social media, there's a lot of potential misinformation going around. So I want to hear from you guys, the people that are here with us today. How are you guys feeling about the possibility of owning your own home or the process? Is it daunting? Do you guys feeling overwhelmed or stressed about it all? I want to know what you guys are feeling to see how we're gonna tailor this to you guys, right? Because that's the goal for Ryan and myself for putting this on is to try and alleviate all these things for you guys, or at least most of them, and to show you that there is possibilities out there, right? So don't feel bad if you're feeling this. We've all been here before, right? Especially with the low inventory market, it's going to be a little tougher, but it's possible. Ryan and I have helped lots of people buy their first houses in this market, get them started in their real estate journey, and go from there. So if you guys are feeling it, it's all right. You can be shy if you want, but just know that we're here to help you guys every step of the way. So before we get into this, I just want to do a little bit of introduction so you know who it is that is talking to you, that you understand that we are qualified to talk about this stuff. So first and foremost, myself, I am Andy Goddard. I am a realtor here in Saskatoon. I've been doing this since 21. We have started a team this year, so myself and Connie have started the A and C team. Connie's on the right there. We have Jessica, who's a newer agent with us as well. So we have a team to help you out here with real estate, whether it's buying, selling, all that kind of stuff. We've helped many satisfied buyers and sellers over the last few years around Saskatoon. Myself, I live in Warman. I moved in Warman in 2016, but I'm born and raised in Saskatchewan. I got married in Warman. I had my 3 kids in Warman. I love calling this area home. My main source and my main area of work is Saskatoon and the surrounding areas, but I am licensed in all of Saskatchewan. I just choose to stick closer to home and help the people here call Saskatoon an area home. And when it comes to real estate, one of the biggest things in real estate and buying your first home is financing. The majority of us do not have the full cash to buy a home outright. So what we need somebody to help with the financing, and that's where the other part of my team comes in. I've teamed up with Ryan a few years ago now. Ryan is my mortgage broker. He's flat out the best one that I've used, the one that I've met. He's amazing. We're really good friends. And so I have Ryan here with me to help talk about the financing with you guys and to help get you pre-approvals when you're ready for it. And so I'm going to let Ryan introduce himself to you guys.
Good evening, guys. Well, thank you so much for that amazing introduction. As Andy mentioned, we are great friends and we are a great team. We work hand in hand. And honestly, Andy and I talk probably every day or every second day just to make sure that we are always up on the market trends, what's happening, what new changes are coming across the board, just to make sure that we can do all that we can to serve you best. My name is Ryan. I work with the mortgage group here in Saskatoon. I am Saskatoon born and raised. Been here my whole life, almost over 50 years now. So that date myself a little bit, but I know the market here very, very well. I've lived in many areas of Saskatoon. As Andy mentioned, we do handle Saskatoon and surrounding areas, but we are also fully licensed across the province. So please do know that if you have something that might be slightly outside the range, maybe it's a PA, maybe something in Regina, that we can do all that we can to help you there as well, as we are fully licensed all the way across Saskatchewan. Even though we are located here in Saskatoon, we have many resources that we can help you out all the way across the province. As mentioned, I've been in this mortgage industry in Saskatchewan for over 20 wonderful years. I've worked for mortgage lenders and banks before becoming a broker as well. So lots of really good insight as to how the market works, some trends in the market that we've seen with interest rates going up and down, and of course making sure that we have the complete knowledge to put your application together the best way that we can to make that approval really, really shine when we send it off to a bank or mortgage lender for you to give you the best chance of mortgage approval. Um, I'm married. I've got two wonderful boys and just had my very first grandchild as well. So lots of sleepless nights here over the last little while, but all good things. We are really looking forward to a wonderful summer with the family here in Saskatoon, and we're looking forward to really helping all of you out in your mortgage journey and finding that beautiful best home to call your own here in the spring of 2026. A couple of housekeeping items, as Andy mentioned. We are going to use the chat function. We are going to have the audio turned off for you guys on your side, but please feel free as we go along here, ask any questions through that chat function, and we will do our best to get those answered quickly for you. What we do find, please be brave. I know that it can be tough to ask a question in an open forum, but please be brave. What we do find typically is that if you have that courage to ask that question, there's usually 10 or 12 people on the other side of that that are wondering that same question. So we love to answer questions. We want to make sure that you're getting as much information tonight as we can as well. The other thing is, as Andy mentioned, lots of the information that we're going to cover tonight is a little bit high level. Of course, every situation and every mortgage and every client is unique to themselves. So we really want to try and have a general, broad information base for you here, but know that your situation and your different circumstances is very unique to you. And we want to make sure that we can talk to you one-on-one to dive down and find out if there's any special circumstances we need to worry about or any setup things that we need to get you ready for that mortgage going along. So we'd love to talk to you. Click that booking link. You'll see Andy post that up here a few times as we're going along. Set that meeting up to talk to us one-on-one and get that process started here. All right, I'm going to pass it back over to Andy to get our webinar started tonight. Thanks so much.
All right. Thank you, Ryan. I appreciate it. So again, you've got a realtor and you've got a mortgage broker ready to help you guys at any time here. So we are going to get into this to keep pace. Like I said, we're going to try and get this all wrapped up by 8 o'clock or just over 8, and then hang out with you guys to answer any questions you have either on this or anything real estate related here. So I put the booking link back in the chat again. So at any time you guys want to book a call with us one-on-one, just want to reiterate these booking calls. It is a completely casual conversation. It is no credit checks. There's no putting you into something. It's just a casual conversation to see how we can help you, whether it's now, tomorrow, a month, a year, whenever. They just want to have a chat to see what your situation is. So that's all it is. But we're happy to have those conversations with you. Okay. So what are the steps to home ownership? So like I mentioned earlier, I can't go over every single thing about what it takes to buy a home. This is here just for a general start to this and how to get you in the right path and avoid some costly mistakes. But this is a little bit of a breakdown of what it shows to buy your first home. Okay, so the first thing I tell everybody is learn what you can about the home buying process. This is why we put this on here. But your main and number one most important thing to do before you can buy a home is get that mortgage approval, or the pre-approval at least, to know that you will be able to get qualified for a mortgage. That is step number one, which I will dive into right after this and show you why it's the most important step. But once you have that pre-approval in place, what we do is we tailor a search to you and your situation and your family, whether you want a condo because you love to travel, maybe you want a fully detached house because you have a bunch of kids and you need a yard for pets and things like that and to run around. Whatever the case may be, we find out what your needs and your wants are, and we tailor a search made for you. Then what we do is we start touring houses, because you can only look at pictures online so much. You need to actually step into these houses to get a feel for them, to see what you think of them. And then once we find that right one for you, we write up an offer, we negotiate where we can. It gets a little tougher in this limited inventory market, but there still is room at some places where we can. Once we get an agreement with yourself and the seller, we get what's called an accepted offer. That's where you're going to hear the term conditionally sold. When you hear a property that is conditionally sold, it means that you and the seller have agreed and accepted an offer. Okay, so it essentially kind of takes it off the market while you go through the condition period. And conditions are things like getting the financing fully approved, getting in any inspections done, whether it's a home inspection, condo reviews, things like that. That gives us time to make sure the place that you are buying is structurally sound, There's no hidden issues. Financing is good, and any other thing to inspect is inspected. It has to be satisfied by you, the buyer, okay? If it's not, you walk away and we go find something better for you, okay? Once the conditions have been satisfied and are removed by us, then the house is fully sold, taken completely off the market. Then we just wait for possession date. Usually it's anywhere from a couple weeks to a month or two, depending on each property. But in that time, you meet up with a lawyer, you sign all the documents, pay the final closing costs. And then, and then once that's all done, then we get keys released. We meet at the property and we do a thorough walkthrough of the place, make sure it's all looks good to you and everything works properly the way it was when we first looked at it. And then that's about it. You are now a proud new homeowner. Okay. Sounds really straightforward and simple. There's a lot that goes into it. Each and every one of those steps takes a lot. You learn more as you go. However, that's just the basics of it, but we don't have time to cover absolutely everything in there. Okay. Just need to know that you want somebody that's there to help you every step of the way. That's kind of what we pride ourselves on, to make sure that you understand what's going on at each moment. You understand every document that you're signing and you understand the whole process instead of just being left to figure it out yourself. Okay. But this is just the basics of it. So as I mentioned, we are going to go into these mistakes now, the 6 that I talked about previously. Okay. Mistake number 1 is not getting that pre-approval. And why is getting a pre-approval the most important? There's a number of reasons why, but the main one is, number 1, it tells you how much you can afford. Your range of affordability is going to be huge, right? It's going to give us a maximum qualifying amount, so we know that we can shop within that range, because there is nothing worse than getting excited, getting your hopes up, go shopping for a $500,000-$600,000 house to find out after that you may only be approved for 400. Okay. There's drastic differences in the price ranges, so we want to make sure you are shopping in the right range that you're allowed to shop in, okay? The next reason why it's important is because in this low inventory market, when it's highly competitive, we want to make sure that when we write a competing offer and the other agent asks, are your buyers pre-approved? And if I say yes, at least they already know you have that step in place, that you've been talking through a professional mortgage broker and they understand your situation and that they're going to be able to get you approved. Now, if we say, well, no, we aren't actually pre-approved yet, we're going to go deal with that tomorrow, they might not even, or probably won't even look at us because they don't even know if you can even buy the place. So that's why it's so important to get a pre-approval before you start any other process. This is your number 1 starting point, okay? So, what goes into a mortgage approval? How do we get a mortgage approval? What do we need? So like Ryan mentioned earlier, this is not a one size fits all thing. This is not a black and white thing. This is such a gray area, but this is just the general outline, okay? So if you think that you may not fit some of this or something of your situation isn't fitting for you, book a call with us anyways, because maybe either we can have ways of working around that because we've probably seen it 100 times, or it may not be a not yet, but we're going to give you a guideline to get there as quick as possible and help you out every step of the way. Okay. It's never been a definitive no. It's always been either yes, not yet, and soon. Okay. This is just a general guideline of what is needed and what they kind of look for. Okay. And all these 3 things have to work together. If one of these things doesn't work, then this whole thing falls apart, okay? But the main one is credit, right? They here in Canada, they of course love their credit scores. They love to see what your credit's like, especially when you get loaned certain amounts of money, right? They want to see, how do you pay those debts off? Do you have a loan? Do you have lines of credit? Do you have credit cards? Are they paid off in time? Are you paid off in full? Have you missed payments? Do you always late on payments? Do you have maxed out credit cards? Have you have a bankruptcy or debt consolidation, right? They need to see what you do with money that's borrowed to you. They want to see a credit score of about 650 and up from there. Anything below that, then it gets into a different lending and different options, and that's something we don't really discuss in this one. But just be aware that anything above 650 is good. Income also is a major factor, right? They want to know how much do you make so they can use portions of your income to qualify you. They're not going to use 100% of your income because they know that you have other bills to pay and other things you need to pay. They're not going to give you 100% of your income because then you're just going to be house poor and house broke. But they want to see income. So the biggest things they want to see is guaranteed hours and guaranteed pay. Okay, that's the major things they want to see. Now, again, gray area here, right? But if you are on a salary position that they say you make X amount per month or per year, we can use that. If we have a job letter from your employer saying you are guaranteed 40 hours a week at, you know, $30 an hour, whatever the case may be, that works. 2 years of income tax statements is probably your best option, but we understand there's people here that are not from or are new to Canada and haven't been here 2 years that don't have that. So that's where the new to Canada program is going to come in to help them and to help you with that. Okay. But so what the major things is to look for income? I see a question about seasonal workers. Yes, that's kind of one of those gray area things, and that's something Ryan can touch on with the whole seasonal thing. But jobs like skip the dishes, Uber, DoorDash, uh, you're self-employed, right? Maybe you work as a car dealership, right? Things like that, that there's no guaranteed hour or pay. That's where they need 2 years worth of income tax statements on that income. Okay. So again, that's why you need to talk to us. Tell us about your situation. See how we can help you when it comes to that income and credit, right? Again, guaranteed hours and pay is what's usually for sure needed, or else 2 years worth of income tax statements on whatever it is that you're doing. Okay. And the third thing is also a down payment. So in Canada, minimum down payment required is 5% of the purchase price. $300,000 home, need 15,000. $400,000 home, need 20,000, and so on and so forth, right? So if your credit and income can support you up to 500,000, let's say, but you have 20,000 saved up, your $20,000 is going to cap you at whatever that would be, 400,000, right? So your down payment amount also affects your approval amount. Okay. That's why I say all these three things need to work together. Okay. When it comes to down payment, that's the big question is, what's some options here? So the main one that people use is obviously their own savings. You've been saving up, you have, first time home buyer savings accounts, you're bringing money from across seas if you're not from Canada, and we can deal with that in a bit. But your own savings is your main one. Your second one, if you have RRSPs saved up, you can withdraw up to 65,000 per person to use for a down payment. So if you're thinking of using those, you're basically just borrowing money from yourself for yourself. There is stipulations with using it that you do have to start paying it back in installments every year. There's a certain amount you have to pay back. So if you plan on using those, please reach out to your service provider. Let them know that's what you want to do, and they'll be able to tell you kind of what the situation is with that. But you are able to use your RSPs to help buy your first home. The third way is what we call the bank of mom and dad. You can get a down payment as a gift from an immediate family member. So they can either gift you a portion of it to help you or the whole thing, but it has to be immediate. So mom, dad, brother, sister, grandma, and grandpa. Those are the people you can. Anything aunts, uncles, cousins, it gets too far away, has to be immediate. Okay. Those are some options for a down payment. There is one more, but it's pretty inclusive, right? So if anybody here is part of the Métis Society of Saskatchewan, the Métis have a first-time homebuyers program where they give you up to $15,000 for a down payment, plus some closing costs covered. So if you are part of the Métis Society and you want to know more, reach out to me. I can get you all the info and the contacts of what you need, and it just works together with a mortgage approval as well. It's Ryan has done them before. It's pretty cool to use if you're a part of that. So again, reach out with that. But those are the three main things generalized that they look for. Like I said, if you don't think you can fit it or there's something missing or you want to understand this more, ask in the chat, book that one-on-one call with us, and we're happy to either walk you through the next steps or show you what we can do now or later, whatever the case may be. Just let us know and we're happy to help talk about that. Where are we at here? Okay, so then the next little thing about pre-approvals is they go to an underwriter from the lender. Okay, they're going to review your income, your credit, and your down payment source, but they're reliable, and that's what tells us our maximum qualifying amount. You are pre-approved up to X amount, and that's what myself as a realtor, need to know. That way, I know where I'm going to shop and what range I can shop for you. Okay, find you the right property in your range. All right. So that's what's important about it. The next little bit I want to talk about before we get to the kind of the next things is maybe you're having an issue getting pre-approval. Maybe there's a couple hiccups here. You can use a cosigner. So again, a cosigner has to be immediate family member. Like I said, mom, dad, brother, sister, grandma, and grandpa. As long as they are either Canadian citizen or a permanent resident, they can be a cosigner for you. And as long as they have an income coming in and they can be approved for the mortgage with you, they can help cosign for you. They're basically saying, hey, I'm going to help you out. If you miss your payments, they come after the cosigner for the payments, right? But that's kind of how it works. We want to make sure we have that conversation with everybody before using one. But they are going to be committed to being a cosigner for as long as you can't be approved on your own. Once you can be approved on your own, then you can take them off the title of your home and free and clear. Now, there are no extra cost to use a cosigner, okay? Not up front. It's buying a house is the same exact way, just a couple extra signatures. The only extra cost comes if you decide to take them off your title of your home. Then you have to pay a lawyer about, roughly $800 to get them off. Or the other option is when you go to sell your property, then once you sell your property, the lawyers transfer the title off of you into somebody else, and then they're off, and you don't have to pay extra for that, right? And then when you go buy your next place, they're not going to be on it, okay? But that's a little bit about co-signers. Again, that's something that gets pretty specific. So if it's something that you need, that's something we'll talk with you about. If we don't need it, then don't worry about it. That's just another option for you. Okay. All right, that's kind of it for the pre. I see there's some great questions coming in. Ryan's crushing it. I am going to pass it off to Ryan here for a bit. He's going to talk to us about the New to Canada program. So for anybody who is new to Canada, this program is going to help you. It doesn't change any interest rates. It doesn't give you better interest rates, higher interest rates. It's everything the same across the board. It's just a way to help you establish credit and things for you because you don't have, 2 years here in Canada. Okay. So Ryan, I'm going to pass it off to you and you can take this away.
Thanks so much, Andy. Yeah, some absolutely amazing questions coming through that chat. Keep them coming, guys. We love to see those. As Andy mentioned, we have a program in Canada for most of our top lenders across the country. It's called the New to Canada program. Now, one of the biggest segments of our first time home buyer market and one of the largest drivers of housing growth in Canada is our new friends that are immigrated to Canada and more specifically into Saskatoon for Andy and I. There are approximately 1 million people that immigrate into Canada each year, and this number does continue to grow. So the government really went together with the government, the banks that are lending across Canada. They needed to come up with a program that would really fit our new friends coming into the country. Now, as Andy mentioned, we have our three pillars: our income, down payment, and our credit pillars. That, of course, if you're new to the country, you probably wouldn't have a lot of those established long term. Of course, new to the country, you're not going to have a lot of long term Canadian credit. Your down payment, you might have brought with you, but you might have to save it up. And of course, the income side, you're going to be starting, typically a new job. So we need to find ways and programs that we could still find ways to assess good credit risk on the new immigrant clients coming into Canada, and really make sure that the banks felt that they were a good risk to go forward. So they developed what's called the New to Canada program specifically, and we're going to talk a little bit about how that works. So slide number one, you'll notice there is some borrower criteria there that, of course, the government and the banks want to see to assess that there is still a good risk there for them to move forward. Okay, so the way they define people that are new to Canada and that qualify under the program are people that have immigrated into Canada fairly recently. What I mean by recently is within that last 60 months or 5 years. What they typically find is if you've been here in that 5 years, you've likely come either on a work permit or that permanent residency. You're maybe working towards your Canadian citizenship, and you haven't really just had that chance to establish the rest of it quite yet. Once you're past that 5 year mark, there is some process that you should have gone through at that time. So if you are over that 5 year mark, you would have to qualify under normal rules. This is really people that have come within the last 5 years. Okay. Qualification number two, you do have to unfortunately be on one of these two. So you have to be on a permanent residency status, that PR status, or you have to be here on a valid work permit. That valid work permit does have to have at least 183 days on it from possession. And and as long as you have that valid work permit with that time limit, we can actually get that done underneath the New to Canada program. Most people are really shocked to find out that even on a valid work permit as a temporary resident, that you would still qualify for a mortgage under the program. Absolutely. So it's not just the PR status. Work permits work as well, as long as we have that 183 days left on it. The one omission there that you may have noticed is anybody that is on a student visa, unfortunately, does not qualify underneath the New to Canada program. What the government has found, unfortunately, is that people coming from abroad to study in our universities and schools here in Canada, the fact that they may not stay is quite high. So lots of people come over, they study, and they leave. So issuing mortgages out to people that are likely going to leave the country, government decision was to not proceed with those. So you do have to have PR or the valid work permit to go ahead. No student visas yet, unfortunately. Okay. Now let's kind of jump into those pillars that Andy mentioned and see how those qualify underneath the New to Canada program. Number one would be that income pillar. Now, you'll notice on there, minimum 3 months full-time employment in Canada, unless it's a corporate relocation. This is really just to, number one, typically with most positions that you start, there will be a 3-month probationary period. So it's really just to make sure that you're not going to be let go for any reason at your position, and that it is stable. So typically they want to see at least 3 months full-time employment there. We have seen some exceptions to that. So if you've moved from a job to another job for a little more pay, don't worry so much about that. Really, what we're going to make sure is that there is some consistency and some stability in that income that we can show the bank or mortgage lender. Okay. Number two, of course, would be you do have to be paying income tax in Canada. So what we want to see is that if you're on a full-time salary job, that there are taxes taken off at the source, things like that. It is typically Canadian incomes. People that are working abroad, if you're new to the country, typically won't qualify. Just a little caveat on that: we can do income Canadian citizens that are working abroad, as long as you have confirmation with 2 years worth of tax returns that show that you're filing Canadian income tax. So not that it isn't there, but usually people that are fairly new to the country won't have that 2 years yet. So we do want to make sure that you are paying income tax in Canada, that you're not employed, maybe in the States or in another country and taxes are taken off there. That unfortunately wouldn't work. Okay. As Andy mentioned, a couple of things on that income pillar that I just want to re-clarify a little bit. So really watch out for things like the Ubers and DoorDashes, anything that's on an expiring job contract, things like that. These things are the Uber and DoorDash, they're considered self-employment. Because they don't have income tax and EI taken off at the source. You are technically a contractor for those companies. Not that we can't do those incomes, we can, but there is a requirement that there is 2 full years of Canadian income tax returns, again, to show the stability and consistency of that income. With those styles of income, they're typically, paid by the delivery, or paid by the load, or paid by the mile, things like that. So the income does fluctuate a little bit and goes up and down. We always want to make sure that income that does have some fluctuation to it, there is some stability in history. So they want to see that you maybe are really busy in the summer and maybe not so busy in the winter, things like that. So the income does fluctuate a little bit. So the banks want to see some consistency year over year in that annual income. So they do ask for that 2-year history to be able to use those as well. One thing we do get asked quite often with our new to Canada borrowers is, maybe if they've immigrated into Canada at different times, maybe a husband and wife with the kids have come at different times, and maybe the wife is here with the children and the husband is still back working in another country. So we always get asked, okay, my income is Canadian, it's with a Canadian company, I work for a salary, all good there, but my husband still has his position back in our country of origin. Can we use that income to help qualify our mortgage? Unfortunately, the answer there is no. We could use the income from the spouse that was already here in Canada and working in Canada, but the banks just really don't have the ability to qualify an income from another country. To just to make sure that there is no inappropriateness with that style of income. Not that there is, but just to make sure we wouldn't be able to really qualify the pay stubs. It may be possibly in a language that the lender can't decipher, things like that. So any income that is out of country, again, we do have to have that income on income tax declared in Canada before it can be used. So unfortunately, a spouse still working in another country with income from that country, we couldn't use to help qualify the application. All right, moving forward, the next pillar that we do want to talk about a little bit is that credit side. And this is typically the one that is missing the most with our new to Canada applicants. The income side, a job is a job is a job. So pretty much what you got in Canada, whether you're a Canadian citizen or a new to Canada program qualifier, they're going to be the same job. They're typically paid the same. They're going to have the same income tax taken off. So income is really looked at the same as it would a Canadian resident. The credit side is really where there's going to be a little bit of a difference. Obviously, immigrating into Canada fairly recently, you're not going to have a lot of Canadian credit established yet. And the government and the banks are fully aware of that. So this is really where the New to Canada program kind of hits home here. So what we want to do is be able to show that you are a good credit risk without the typical 2 or 3 years worth of built credit that a normal Canadian borrower would have. So how do we do that? Okay, so if you've been in Canada for under 12 months, what is required, and the timeline is at least 6 months. So you have to be here at least a 6 month to show some credit stability. So if you've been here in Canada between 6 and 12 months, the down payment requirement is a little bit higher at 10%. Okay, just because of the additional risk, we don't have a lot of credit that we can show there. So we need a little bit more down payment. But what they show for credit risk is really quite simple. So as long as you can show 6 months worth of a well-handled primary bank account, so a bank account where your pay goes into and your bills go out of, show that that's well handled and there's no missed payments or NSFs or anything like that for 6 months. As long as you have 10% down payment and 6 months of a bank account well handled, you're good to go with the New to Canada program between 6 and 12 months in Canada. Okay. Now, if you've been here 12 months or longer, even better. So what we go there is the government will say, okay, you've been here for 12 months. We can get a few more things from you that are a little bit, easier to get. And we can lower that down payment requirement down to 5% for you. So if you have been in Canada for 12 months or longer, you can go back to the normal minimum of 5% down payment, which is normal in Canada for all borrowers. So if you've been in here 12 months, you can use that 5% down payment. What we require for your Canadian credit support is we're going to get 12 months of rental payment history. So we're going to get a landlord letter and bank statements to show that that rental payment's been made well for 12 months, and any other 12-month strong payment that you have on any bill, any utility. So an SGI plate for your vehicle, a Sask Power bill, a Shaw Cable bill, SaskTel for a cell phone, anything like that we can show a structured payment that's been paid well for 12 months. In addition to that 12-month rental history, you're good to go on the Canadian credit side without having any credit card or any Canadian history on the other side. So lots of things that we can do to help you out on the credit side there. Now, the last thing, of course, the last big pillar that we want to talk about is that down payment piece. Now, This kind of works, as you saw on the previous slide, this works a little bit hand in hand with the credit requirements. So if you remember, if you've been in Canada for that 6 to 12 months, um, you do need that little bit extra down payment just because we don't have a lot of credit established. So it's kind of a three light system. We want to make sure that, if we are a little weaker on the credit side, that we want to bump that down payment up a little bit. So if you have been in Canada for 6 to 12 months, we need that extra down payment, that 10%. If you have been in Canada for 12 months or longer, you are able to put down what every other Canadian citizen is able to put down, that minimum of 5%. Okay, so great news. Once you've hit that 12-month mark, we can get you into that 5% down payment minimum that everybody in Canada gets. Okay. Now, down payment, again, as Andy mentioned, can come from a few different ways. So, borrower's own resources. This is typically the easy one. So, you save up, you put it in the bank, we let it sit there for a minimum of 90 days, 3 months, and then we show the bank that you have good savings for that 3 months, and away you go. Some other ways that you can save up for the down payment, RSPs. If you have RSPs that you can take out of the bank to use for down payment, we can use up to $65,000 for the down payment, or $60,000 for the down payment on RSPs as well. As Andy mentioned, a gift from an immediate family member, that bank mom and dad. So as long as you have a non-repayable gift from an immediate family member, whether that's your mom, your dad, a grandparent, or a sibling or a child, anything like that will work as a family gift. Those qualify for down payments. Now, keep in mind that those down payments can come from a mom that's still in another country. If you do have down payments that are coming from a parent that is outside of Canada, we can still do those. What we require there is we need to have the gift letter signed. We need to have the funds sent to your bank account, show that they've landed in your bank account, and those will come by wire transfer if they're international. We need a copy of that wire transfer in addition to showing the money transferred into your bank account. So still very simple to get that done, just that extra step with the wire transfer. But yeah, we can get money from mom and dad from, if they're overseas as well. Okay. Now, again, typically that down payment is required to show a 90-day track record of saved funds in your account. So, what we really want to watch here is that any money that's coming from overseas, make sure that it comes over and it sits and it lands in your account. So, what we recommend is that if you're looking at buying a home and you've moved money, you've come in from another country and you have money that's coming in, get that into your Canadian bank account as soon as you can, because we do have to have it in that Canadian account for at least 90 days. Okay, so really, really watch that. The other thing is we find is that a lot of people will come over with cash, like wads of cash in a bag, and they put it in their closet or in their mattress. Again, for the purposes of a mortgage, and this is more of a anti-money laundering legislation with the Canadian government. We cannot use cash in a bag as down payment for a home. It does have to be trackable through our bank channels. So even if you have cash, that money has to go into a Canadian bank account and sit there for a minimum of 3 months before we can get a mortgage approval for you. So know that if you're bringing money over from another country, please, please, please get it in the bank as quick as you can. And if you have cash, get that in the bank as quick as you can. So we do have that 90-day history when we're ready to go and write that offer, and that doesn't hold up or stall or stop your mortgage or your approval with the realtor and your approval with the mortgage. Okay, so a couple of tips there on the down payment side as well. Now, as I mentioned, every situation is very, very unique. We'd love to talk to you one-on-one. I deal specifically with a ton of new to Canada. I used to teach this to many brokers across the province. So I'm very well versed in how the program works, ways to really teach and train you to get things ready to go, to make sure that we're all ready to go when we bring Andy in to get your writing offers. let's have a look, let's have a chat. Please click that booking link and we can go through your situation one-on-one, really make sure that we have the down payment set up. We've got a great plan for the credit. And of course, that income has started. And we talk a little bit about how that pay flows and if there's anything that we need to do there as well. We love to go through this stuff with you. We love to make sure that we have all those stepping stones in place and then issue out that pre-approval to make sure that you're all ready to go buy a home. All right, guys, thank you so much. I'm going to pass this back over to Andy. Hopefully those questions have been flowing fast and furious on the chat room, and we'll get the rest of this webinar finished up for you. Thanks so much.
Awesome. Awesome. Thank you, Ryan. I appreciate that. Yeah, there are some questions in there I figured I'd leave for you on this, and I'll keep us rolling here. We got about 15, 20 minutes, and then we'll have this wrapped up for you guys. So yeah, the last little bit about the financing side of things. I put the booking link in there one more time for you guys. If you want to know more about any of that situation or new to Canada programs, all that kind of stuff, let me know. Book a call with us. We're happy to help. So the last little bit about the financing side of things before we jump into the real estate is using your bank. A lot of times we get people that, they have their bank. They've been using their bank forever, right? Whether it's Scotiabank, RBC, CIBC, doesn't really matter which bank. Just using your bank for something like getting a mortgage approval, I don't recommend it. Now, I've done this for years now. I've worked with many of them, and a lot of them have the same set of headaches, okay? My dad was a general manager of a credit union for years. I've been in the finance, learned a lot about financing through him, and I still use Ryan as my mortgage broker, right? He does everything so well. He takes care of clients. That's the benefit. And I'll kind of explain why I do not recommend going to your bank. However, if you have already gone to your bank to kind of get the steps started or get an idea, I 100% every single time highly recommend you get that looked over at by Ryan as well, simply because, 9.5 times out of 10, Ryan can either beat or match the rate, but give you a better program and better customer service and save you money in the long run. Okay. This is a long-term investment. We want to help you save money in the long term, not just your money going to interest that you could have avoided paying. Okay. So the difference between why I recommend using Ryan as a mortgage broker over a bank is Ryan has access to over 30 different lenders' products. Okay. He can shop the big banks and he can shop you to other lenders. What he's trying to do is find you the best interest rate for the best product and program that's there for you. Whereas you go to your bank, they're going to have their one thing in their in-house branch and that's it. Okay. So they don't get to shop around. You get what you get. Ryan works the same hours as I do. As real estate doesn't really sleep. It is 24/7, it feels like. It's evenings, it's weekends, it's during the day, right? So if we're in a very competitive market, if we're dealing with a competitive offer, which has happened numerous times, I know Ryan has lost count the amount of times that I've called or texted him with a quick question about writing an offer for one of our clients during the evening, right? If I try to do that when you're working with a bank, they always are closed until the next day, and by the next day, it is way too late anyways, if I'm lucky to get back to them by the next day. Banks, I find, are a lot slower to get stuff done. They stretch it right to the very end during the time frame that we have, and sometimes we have to keep asking for extensions. Ryan is on the ball with it. He is quick as he can be, and he'll get this done for us, okay? Like I mentioned, Ryan's going to offer you his best mortgage rate up front. Okay. Mortgage interest rates will save you money. I'd rather you put more money in your pocket than that goes to interest. Okay. The banks will tend to offer their bank posted rates, and you may need to negotiate a better rate. Either some people don't like doing that or they don't even know about that. So why worry about it when it's already being done for you? Okay. Ryan works for you and your best interests, right? Ryan doesn't work for a lender. Okay. He doesn't work for any of the banks. He works for you. The person at the bank works for the bank as well as working for you. So there's kind of a conflict there. Okay. And like I mentioned, you can call or text Ryan with any questions. I say anytime, but like reasonable. Please don't message him at 2 a.m, please, but like reasonable hours and things like that. But the banks are usually done at 6 o'clock. Ryan is still going to help us out in the evening when we need it because he just understands that's real estate. Okay. Banks are hard to get a hold of, trust me, all the time. I usually have to email them and then call and call and call and call and call to get any sort of answer out of it. And even if I get a hold of them, I don't get any answers or responses. whereas Ryan is always there for us. Okay. That's why. And again, not just any mortgage broker either, right? The reason I work with Ryan is because I've used other mortgage brokers and they're either slow or they don't understand or they can't fix certain problems and they just easily fluff things away. Ryan knows how to get things done and fix things, right? If there's an issue that comes up, Ryan is on the ball and fixing it. Okay. I've lost count how many deals that Ryan has saved for us because he has a way of doing this, right? So that's why it's very important to use and talk with us, talk with Ryan to get this pre-approval through him, not just using your bank, right? And again, if you already have a pre-approval for your bank, that's okay. Shop it over to Ryan and see how he can help you either match it or give you a better product. Okay. Uh, Also, there's things called bank payout penalties. Okay, not just bank payout penalties, but payout penalties. So mortgages are typically 25, 30-year mortgages, whether you have a 5-year, 3-year fixed rate, variable rate, whatever the case may be. If you don't have your mortgage paid out and you decide you want to sell the property and move somewhere else, whether it's relocating to a new country, a new city, a new province, or you want to upgrade because you've outgrown it and you want to turn it into a rental, you are going to do what's called, you're going to break your mortgage, which is fine. That happens to everybody. Majority of us do not stay in our first homes, right? What you need to know is that when you break your mortgage, there can be a payout penalty. And so Ryan's going to show you how you can get little to no payout penalties. There is no guarantee there won't be any, but bank payout penalties can be quite a bit higher. Again, we don't want you to lose money by just having a change in life, whether it's upgrading, downgrading, moving for whatever case may be. Okay. So these are all things I want you guys to think about when it comes to the financing side of things. So if you want to know more, whether it's you want to know if you can get pre-approved, if you need to have information on what you currently have to see if you could get pre-approved, reach out to us. We are happy to just walk you through these steps to show you whether it's now or later and what we can do for you. Okay. So book that call with us. Let us talk with you about that. Okay. We have about 10 to 15 minutes. I'm going to run through just a quick little bit of the real estate side of things to show how on my side, can save you guys money and headaches from buying your first home. Okay. I did see a question in the chat up above. I was going to mention it, but I figured I'm just going to wait. I had somebody ask, I got to go look back, but something asking about, do builders have sales reps and things like that? Yes, they do. Absolutely, they do. Builders have sales reps, just like every car salesmen have sales reps and things like that. Why it's an issue going straight to them is because you're going alone and you're losing negotiating power. Trust me, I have had phone calls with builder reps before. I'm not going to name names or builders or anything like that, but I have had the conversation with builder reps saying they are shocked the amount of people that think they're going to get a better deal when in reality they get a better deal using an agent with them, instead of going directly to the builder. Okay. What you need to know about new builds is they typically do not touch the purchase price, right? We can't negotiate the purchase price because they have a set amount for the build, especially for builders that are building blocks of homes, right? If their builds start at 500,000, that's what it is, right? If I, as a realtor, go there and offer them less and negotiate less, the next agent is going to see that I negotiated less and they're going to negotiate less. So every time a house gets negotiated down and down and down, all of a sudden their $500,000 build is now going to 495, 490, 485, 480, and down the block where all of a sudden their last home is now going to be worth 460 and they're losing a ton of money. So they're not doing that. They do not touch the purchase price. What I can do for you to help you save money or get more value for this is in add-ons. Okay. Most new builds don't have everything. It's just the bare basics. You get your main floor in your upstairs. The basement's completely undeveloped. Usually there's no landscaping, there's no air conditioners, and there's no appliances. So what I can do is negotiate and get them to put in an appliance package, which is roughly $9,000, or an air conditioner, which is $6,000 or $7,000. Or I can mix them both and say, look, I want an appliance package plus the AC, and we want you to throw it in and see if they agree to it. If not, at least I'm going to get you some money off so you're not paying full price for add-ons that you should have in your home. Maybe you want to upgrade some things in the homes. Maybe you want to do landscaping or put a fence in or put a deck on the back. Okay, we can negotiate those in and save you money instead of paying full price or any for these add-ons. Okay, that's why it's important to have somebody that's willing to fight for you to get things added on for you. If you go to the builder, sometimes they may not do that for you. Okay. The other thing I have people ask is, does it cost, like, do we save anything? And no, the builders have built the purchase prices with any fees and things like that built into it. So you don't save any money going straight to them. Like I said, you're going to lose out on, more negotiations that I'm going to fight for you. I don't care about the builders. I think they can put as much things as I want in there. And that's what I'm going to do for you, right? Get as much as you can for the money that you're paying, right? That's what I'm going to do for you. Also, things happen when it comes to new builds, right? Just like any home, you buy anything, risks are part of it, right? Builders are still human. The workers that build these houses are still human. Mistakes happen. Okay. So you want somebody who's there to fight with you while you go up against the builder. If you go straight to them and you don't have representation and you have to try and get things fixed, you are now kind of on your own against the builder. You need somebody who has lawyer connections and has done 100 of these new builds to understand what goes into this and how to fight for you. Okay. That's why it's so important to have somebody on your side to go to these new builders. Plus, I can show you who are really good builders and ones to avoid and things to look out for with these new builds. Okay. That's why that is so important to have somebody on your side. All right. I don't touch a whole lot on new builds because there's so much that goes into them, but those are some things I want you guys to think about. Okay. Yeah, as Ryan said, book a call with us if you want to know more. But the last little things are very important as well. So home inspections are, again, a condition built into the offer for the home. We want to make sure the house you are buying, you understand everything about the house. Okay. Typically, a home inspection for a regular detached home is around $500. Okay, $475, $500, depends on the size and things like that. But some may think, yeah, that's a bit of money. But when you're buying a $400,000 or $500,000 home, $500, $500 is not a whole lot to get what you get out of these. They check absolutely everything in your home, everything from top to bottom. We do a showing, takes about half an hour to 45 minutes. You cannot see everything about the home in half hour, 45 minutes. A home inspector takes hours to do an inspection to look at everything. Okay. What's really important to know about a home inspection is that it's built as a condition. If something is in the home inspection you do not like, you can walk away from the house and go find something else. Or we can negotiate those things to be fixed, or we can negotiate some money off the purchase price so you can fix it on your own, depending on the severity of each fix. Every single house and every single inspection is different, but this is just a general idea for you guys. Okay. Just because we have a home inspection doesn't mean we're done negotiating. There's still things that need to be worked on a house, even if it's a brand new build. I do home inspections on new builds all the time because builders can miss things. And then you can take the home inspection to the builder and say, here, fix this list that my home inspector just found. Okay, because you have warranty, that's the point of it. Okay, so home inspection, this is what they check, right? So a home inspection is non-invasive, which means they cannot open up walls, they can't rip apart things to look into it. They can only take apart what they're allowed to and see what they can see. They use thermal imaging to see any insulation that's missing. They'll check for any excess heat or excess cold areas. They'll check for, they have moisture meters to check for any leaks that either are there or currently there or have been there, right? They check your electrical system because obviously electrical is a huge part of a house. Make sure that that's not going to start any fires. Make sure the electrical is run properly. They'll check your electrical box and they'll check every single outlet in your house, like every single one. Okay. They'll also check every piece of plumbing in your house. So they'll check everything that has water into it. Toilets, sinks, washer, dryer, or washing machines, dishwashers, anything that has water go into it. They'll test it, make sure there's no leaks, and check if there was any leaks previously from it. Okay. We're cold. The furnace is one of the most important components of your home. Keeps the home warm during the cold snaps, and if you got an air conditioner, it keeps the house cool during the summer. So they'll open up the furnace, they'll check the insides of the working of the furnace, making sure that it is properly firing and making sure it's working properly, because that is very important to have. In the winter, we can't check air conditioners, but they'll do what they can to make sure it's going to be functioning at some point, do a couple visual checks on it. They'll check every appliance in the house to make sure the appliances are functioning properly. They're going to be up on the roof, checking the roof for any leaks and any shingles are missing. They'll check the siding around the house. They'll check the garage. They'll check your foundation. They check in the attic to see if there's any leaks coming from the roof into the attic. Trust me, they look at absolutely everything, and that's why it takes hours. Okay, these are very important to have because if you do not get a home inspection and you find out your roof is leaking or your foundation is leaking, or you have a mold infestation, pest infestation, right? Anything that are major can cost you tens of thousands of dollars. A new foundation could be 20 to 50 grand to fix. A new roof, 10 to 20 grand to fix, right? It's so much that could go wrong that you don't see. That's why spending that money is so, so, so important to do, and never skip it, whether it's a new build or a resale home. Okay. Again, we're here to protect your investment. We want to make sure you're happy with the house you are buying or the property that you're buying. Okay. All right. We are getting to 8 o'clock. I have one more thing I want to cover for you guys before we finish up here on the Q&A session, and that's skipping a condo document review. So same as the home inspection, this is mandatory that when buying a condo, whether it's an apartment style condo, a townhouse condo, or anything that is attached to a condo corporation, it is mandatory that you, the buyer, get a copy of the condo documents. It's called an estoppel package. Now, as a realtor, we are actually not allowed to review what's in the package with you. That's what lawyers are for. So when we get a estoppel package, we find a lawyer, we get them to review it because they're going to be doing the transaction for you. So we have them review it. But what I can tell you is in these things is absolutely everything about the condo. It's how it's run. How well is it being operated? Or have they been audited correctly? Do they have a lot of money in the reserve fund? And the reserve fund is how much money the condo has saved up for any fixes that come up, right? We want to see a healthy reserve fund. They have a maintenance fund that tells you how much your condo fees are, what all your condo fees go to, right? What the condo fees cover, what the bylaws of your condo, so what you can and can't do in there. Some have renovation restrictions on what you can and can't do in your unit, whether it's maybe you can't replace carpet with hardwood on apartment condos because it affects the sound barrier, right? It tells you everything about it and how well the properties run. If you buy a condo or are purchasing a condo that has a very mismanaged condo property management company, you could be looking at what's called cash calls. So if they don't have enough money in the reserve fund, they come to each unit owner and ask for more money to help fix whatever needs to be fixed. It could be a couple $100, could be a couple $1,000. Some severe cases, they were tens of thousands of dollars. Okay. That's why it's very important to have a lawyer review it, make sure that the condo has reserve fund studies done, are being audited correctly, are being managed properly. And I can tell you which are the good property managers in a city and which ones may not be the best ones, right? Ones like SRES is a good one, ICR is a good one, Tyrannica are a good one. Those are your big ones in the city. Self-managed ones are okay. Those ones you want to really watch for as self-managed ones to make sure those are being run properly. But either way, get a lawyer to review it. Much like the home inspection, if there's something in the estoppel you are not happy with or are nervous about, talk with the lawyers about it, talk with me about it, or we can walk away and go find a different condo. Okay. It's another condition that protects you, the buyer. Because again, if you skip this and you don't understand something in there, you could be facing cash calls, major increases in condo fees, or you could maybe do some renovations you weren't aware you weren't allowed to do. You get caught, you get fined, and you have to redo your reno, so that essentially doubles your renovation costs that you just spent a bunch of money on. Okay. So again, a lot of this stuff goes into it to help save you money and save you headaches when you're buying your first home. You need to work with people that are understanding of this and are here to protect you, not just find you just a simple place to get into. Okay. I don't shy away from condos. Don't get me wrong. I love condos. They are a great starter opportunity because not only are they cheaper, you don't have to worry about maintenance, and they turn into very good rental properties. So you could turn that into a rental and go buy your next one and have revenue producing property at the end, right? Or sell it because they still build equity as well, just not as fast as a detached home. Okay. But again, all this stuff here that we talked about is just the basic steps and the starting point of buying your first home. And there's so much more that goes into it, but just know that there are people out here that are willing to help you guys every step of the way to make sure that you understand what's going on every step of the way. Okay. Okay, we are at 8 o'clock or just after. That's kind of everything that we want to talk about that we have built into this. I hope you guys are feeling a bit better now that there are people here to help you, that there's things we're here to do to protect you when buying your first home. I know there's a lot that still goes into it, especially in a competitive market, but it's 100% doable. And we've helped many first-time buyers navigate this effectively and properly. Okay. When you book that booking link with us, this is what shows up. It's a calendar. You book that slot with us. Like I said, it is a casual conversation, no pressure, no forcing anything. We just want to know about you and what your situation is, how we can help you either now or in the future. Okay. That's all it is. I look forward to talking with everyone that has booked a call with us so far. I really appreciate it. I look forward to talking to you guys later on in the future. But as of right now, I'll let Ryan kind of jump back in here too and see if there's any kind of questions that we missed. And for everybody else that's still here, throw some questions out there you have either about this or anything else you guys have been thinking about during the whole process that you want us to answer. We'll talk about anything real estate related, mortgage related. Let us know. We're happy to stick around to answer these things for you guys. Anything we missed, Ryan?
No, we had some absolutely great questions. This was one of the most engaged webinars all the way through. Like really some good tester stuff. Lots of really, you can tell just by the level of questions there was just some in-depth thought that went into them, some specific situations. People really asking about, I'm assuming their own specific situations. What I would say to that is, with those great questions that you've asked, that means that you may have some specific circumstances around your situation. We want to talk to you about that. We want to make sure that we have gone through that we understand all about the income, the credit side, where the down payment's coming from, so that we can properly give you all the advice that you need to move forward properly so that that approval when you hit the mortgage side is quick and easy and simple. The more that we know, the more that we can help with. And we've done this a lot, guys. We've helped a lot of people in a lot of different circumstances get into new homes. And with the market really escalating over the last few years here in Canada specifically, um, getting in sooner and getting something so you can start building your own equity is so important. We find a lot of people that really sit on the fence. They're unsure. They're like, well, you know what, maybe I'll wait for the prices to come down or the rates to get better or whatever's happening there. Let me tell you, in Saskatchewan, we have one of the most stable housing economies in Canada across the country. We're in the top three most stable housing economies in Canada. Our prices don't go down. They are very steadily, they increase about 3 to 4% every single year, and historically have done that for many years. Okay, so if you're waiting for prices to drop suddenly and the market to correct, it's likely not going to happen. Okay, what we really want to do is get you in, get you building your own equity, putting money on your own mortgage into your own pocket instead of paying that landlord, because then the money goes to pay their mortgage and goes into their pocket. We want to get you building your own equity. If you're paying that money anyway, whether it's rent or a mortgage, they're both typically the same. We want to get that money going into your pocket sooner. So the more that you can make that decision, get that pre-approval ready to go, you can make that decision confidently and move forward to building your own equity in your own home. Great question here from Kimmy. If you get pre-approved, how much time do you have to make the purchase? Great question, Kimmy. So typically, most pre-approvals are good for 120 days or 4 months. Now, really, what we do in that process, that's just when we get the rate held. That rate is held typically for 120 days. What we do when we go through that process with you is you and I will have a great talk. We'll talk a little bit about what you want, some specific needs out of your mortgage, what you want out of a property. Are you looking to pay that down quickly? Are you looking for the cheapest payment? Or, what are your needs and wants in that mortgage transaction? We're going to make sure that we get you a lender that fits all those options for you at the best rate that we can do that for you. We have 30, 40 lenders across Canada that we can use. A bank has one option, one rate, one product. We have many lenders, many banks. We actually use, three of the banks across Canada as well. So if you specifically want to be with a bank, we typically have a bank option for you. But what we do find is that the banks do charge, higher fees, higher penalties, and typically not the best rates. So we want to go through and let you know that we have 30 different lenders across Canada that are the top A prime lenders in Canada that we have access to find out something that really fits you the best. So we're going to go through and we're going to talk a little bit about your income. We're going to talk a little bit about your down payment. We're going to talk a little bit about your credit history. We're going to get you ready to grow. So as much as that rate might only be held for the 120 days, our analysis will get you ready to go forward, whether that's in 1 month, 6 months, a year, whatever that is. We are going to continuously stay in contact with you should that go a little bit longer, update the information as we go forward to make sure that you're always in that best position to move forward. So it's not just a one and done. We're here for the long haul, dear. I'd love to help you all the way through that transaction and let you know we're here from beginning to end. So if we're updating information and things like that, that's what we're here to do. So as far as your specific question on a timeline, the rate that we get typically is held for 4 months, but if it does happen to slip a little bit past that 4 months, we just get that redone and get a new rate set in. But we will go through the entire information for you. So hopefully that answers your question. Question here from Jessica. Are you having another webinar soon? I would love to send this to a few other people. Oh, thank you. That just warms my heart, Jessica. Thank you so much. Hopefully that means you received some great information from this, and we'd love to help out your friend. Number one, yeah, we typically do these every month, so this is great. Andy will be sending you out a recording of the webinar as well. So if you wanted to show your friend that as well. The other option that we would really recommend is that you send our information over to them. Maybe when you click the booking link, you'll have our information and pass that information on to your friend, and we can have a specific in-depth conversation with your friend as well. So great question. Thank you so much. That means the world to Andy and I. We would love to help you out and help anybody out, that is in your inner circle. We don't do a lot of advertising, guys. This is typically our livelihood is from word of mouth from previous clients. So that's we both make a living out of doing this without advertising all over billboards and things like that. That is, how much we believe in the process of helping our clients is that most of our referrals do come from past clients and friends. So we'd love to speak to you, and we'd love to help out your friends as well.
Yeah. No, good,
How are we
good
doing on
stuff.
our questions here, guys? I don't see too many more coming through here. If you do have any more questions, I think there's still a few that are hanging on here, guys. If you do have any questions at all, just throw those in the chat box and we can get those quickly answered for you. I'll give those a few minutes here as we go forward. Andy does have the booking link back on here. Again, I know that we sound like a broken record here, but we really want to make sure that the information here is transferred into the next step in the process. And that's really going through each of your individual circumstances to make sure that we have all of those stepping stones, all of those building blocks in place to get you ready to make that offer, go view properties, find that perfect home, and write an accepted offer and get the best chance of a mortgage approval. So having those building blocks in place as we go along here, so important. So that you can buy with confidence, knowing that when we say, "Hey, you're good to go at this price range," that you're confident that when you write that offer, that mortgage is not going to be a problem. So that's what we're here to do is really go through that with you, make sure that we put you in the best confident position to buy, and make sure that we do our best to find you that perfect home and get that offer and negotiation. We're going to walk right side by side with you all the way through that process to give you the best chance of not only getting that approval on the mortgage, but that approval on the home. We might be in a bit of a competing offer situation, and he's the best at that stuff, guys. Having him by your side, so important. And yeah, click that booking link. Let's chat.
I've got another question that came in. I love this question. I kind of forgot to touch on it. What's the cost of working with a realtor? That's a great question. As a buyer side, honestly, there's
We're
no
free,
fee.
guys.
Yeah, free is good. So in 100% transparency with you guys, how real estate works is when you sell a property, we charge commission. Okay. So the sellers are effectively the ones that are paying out of the proceeds of the sale for the commissions. We split that with any agent that brings a buyer to it. So I have one that's listed right now over in Hampton Village. I got another one coming up here next week. But, anyways, the idea is I charge them a commission to do this. If somebody brings me a buyer to it, I will split that commission with them because they're doing half the work. So, as the buyer, you are not out of pocket any expenses to use a realtor. We just ask that as we're doing this because we do not get paid until you successfully have keys to a house, right? So whether we show you one house, two houses, 100 houses, we don't actually get any pay until you are fully closed. So that's the one thing we kind of just ask is if you're going to choose to work with us, which we hope you do, we're here to be loyal to you and we kind of hope the same. But obviously, if there's something that's not working with you, we're happy to discuss it and things like that. But that's as a buyer, you do not pay any fees for our services. That's just on the sell side. Okay. So great question.
Yeah, as Andy mentioned there, guys, it's really we're putting a lot of faith and trust when we have that relationship set up, and we are going to give you 110% of all that we have. As Andy mentioned, we're not paid until the transaction actually closes and that mortgage closes. So we are putting a lot of trust and a lot of faith up front in you. And all that we ask is that once you do engage with our services and choose to use us, that you do kind of stay with us all the way through the process. We're putting a lot of time, a lot of effort, and into finding the perfect home, that perfect mortgage solution for you. All that we ask is that you stay with us all the way through the process. So yeah, cost is free. All that we ask is for a little bit of love and trust and staying with us all the way through that process.
I like this last one here. How long do you keep people who make contact for this process in your list of possible clients? Ever. Ever. Like we've had people ready to go the next day, the next month, but I've had people reach out to us like literally 2 years later. They may have watched one. I keep track of everybody that's been on these, whether they have attended it with us or signed up but haven't attended it. I see all of it and I have it in my contact list. And I've had people honestly reach out to me 2 years later after watching it saying, "Hey, I remember watching that with you. We weren't ready at the time, but listening to what you said, we used it and now we're ready to go." And then they get the process started. So like Ryan, myself, we try to strive to make this noted for everybody is when we say book a one-to-one call, that's all it is just that conversation. Whether you are ready now or in 2 years from now. We just want to know your situation to help you get there faster if that's truly your goal. If you're just simply on the fence and saying, "Hey, I just want to wait a year to get my finances in order," that's fine. I'm not going to hound you every single week and month saying, "Are you ready? Are you ready?" I'll sit back and when you're ready, we're ready. That's just how it's always been, and it's worked very well for us. We don't like to pressure people at all into doing this. So yeah, we have people that have honestly come back years later and go through with the process. So
Yeah, funny you mentioned that, and that is an absolutely amazing question, Olive. Thank you. It's a bit ironic. I had a client that reached out to me this week on Tuesday, and I spoke initially. This individual was on a webinar over a year and a half ago, and they reached out. They clicked the booking link. We had a great conversation. There were a few steps that they needed to get ready for, bringing money in, and we set up a great plan to have that done. They went through the steps. We stayed in touch periodically as that time went forward, just to make sure that they were following through with the plan and that we were still on track. They did go through, they got their stuff ready, they reached out and said, "Hey, Ryan, we're good to go. Thank you so much for the advice and setting that plan, ready in place going forward. We're ready to go." And these people should be looking at buying something this spring. So yeah, that is an absolutely great question. But as Andy mentioned, we're here to walk with you with this process. This isn't something that we want to lead you. We want to make sure that we're working together to get your goals met. We want to make sure that when you're ready, we're ready. Okay, so no pressure. It's really just about getting you the information that you may need, setting up some time to look through there, make sure that if there's anything that we need to work on or fix or repair, that we can do that. But when you're ready to go, we're ready to go. So yeah, we we've seen people 2 years later that that have really come back around and have found great help with our service. So we're looking forward to being friends for the long run.
Perfect. Okay, well, I appreciate everything from everybody's conversations. I look forward to all the people that have booked a call with us. I look forward to talking to every one of you. I have one last time. Here is the booking link, but I'm just going to cover one quick more thing for everybody. Then I'm going to get us out of here for the rest of the evening. So, all right. So. Again, this is recorded. Tomorrow, I will have you guys an email with the book, the buyer's guide, and the recording. Again, check your inboxes and your spam folders for that. And then, yeah, if you guys have any more questions, book a call with us or reach out to us at another date, and we're happy to have that conversation with you. But in the end, here, I appreciate everybody for sticking around. But we are going to wrap this up here and get you guys off for and enjoy the rest of your evening. All right. Well, thanks again, Ryan, too. I appreciate you helping out again. And yeah, we'll let everybody go.
Thanks, guys. Have a great night. Take care and talk soon.
See you guys.